Good afternoon and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, March the 9th. About 4:15, we had some technical difficulties today getting started. Citrix evidently has changed their formatting and anyways, everything's resolved. So let's get through the disclaimer. These webinars are for educational purposes only. I'm not a licensed representative or giving any trading advice. Trading does involve risk. So be careful what you do. Okay. Macro picture. As you can see, we're having some volatility, folks. I got rid of the Fibonacci's because it started to get busy. I think what I'm going to do is, as these meetings go on, I'm just going to do it live so you guys can see what's going on. So the Dow, the S&P 500, the NASDAQ, we had a pullback as of Friday. The market kind of reeled from the unemployment report, as well as the fact that the Fed's may be raising interest rates. Today, it bounced up. We closed at 138 points up. Everything rock and rolled. So what I call this is volatility. And I'll share this with you. Those of you that don't have leather skin and a strong stomach to be able to weather this, I wouldn't trade during this time. If it was me, this is a tough time to trade during volatility. The market goes up 200-300, goes down 200-300, and up and down. Everything tells me this is a temporary, though. This is a temporary pull-up. We are bouncing off the 49 EMA on both the Dow and the S&P, but we still have a pretty strong detrending price oscillator on all three. So I think caution is definitely needs to be taken. So let me throw on some fibs real quick so you can see where these things could potentially go to. Okay, everybody can see that, I take it. So blowing this up on the Dow, looks like we touched the 38.2 retracement. You can see Friday's wick just touched it right here and then bounced off the 49 EMA. Same thing with the S&P, touched 2066, bounced off the 49. And the NASDAQ didn't quite make it. But when I've got a pretty strong hull turned over on all three indices, and I've got a breakdown in the David Elliott MOBO on all three indices, including a person's pivot, and a detrending price oscillator this far below the bands, this simply tells me this is a temporary pull-up, and that's my take on the markets right now. Going to the short term, what's going to affect us this week? Really, it's jobless claims on Thursday and the PPF. This is the Federal Labor Bureau's producer price index that's coming out. And of course, my alma mater's consumer sentiment is coming out at 10 o'clock on Friday. So other than that, not a lot. One of the reasons the market went up a lot today was because of the EU decided to start buying bonds from Germany and Italy. There was really no rate changes globally over the weekend. A lot of people were looking at the China data. China data was actually pretty positive. So all of that bode to a market catching some of the bottoms on a lot of this stuff and pulling up pretty strong. So that's what one of the reasons the market went strong upwards. So caution is what I'm suggesting, or what I'm doing with myself this week. If you're on long positions, you probably all got beat up last week. But I need to throw a question out there. Who shorted the market last week? Just give me a yes or no. Okay. Anybody else short the market? Got a couple of responses. Well, if you guys recall what I put in my last week, I'm going to bring this up so you guys can see it. There are 3 shorts I talked about, specifically Priceline and Netflix. Now, we have some very, very good traders online. One of them, SC, I'm going to call you SC. I think you know who you are. He's a student of Elliott Wave for many, many years, a very good trader. You know, he's calling this really well. He called the 1250 pull-up. It was wave 3, which is the strongest wave in Elliott Wave. We were in wave 4. On a short-term correction, Priceline was going to go down to 1210, 1205, 1200. Could go as low as 1190, but probably not. What happened between last week and this week? As a matter of fact, today, if you guys were following what's going on with Priceline, take a look at what the low was today, 1202. So with that in mind, you see a hash mark up here, 75% probability. One of the trades I'm going to be looking at is playing Priceline long again. I did short it. I shorted on the 1250 or 1240 on Tuesday. I bought those for, let's see, I bought the Priceline 1240 weeklies for $7.30 on Tuesday. I sold them for $21.90 on Friday. I kind of followed my own advice. I didn't buy the 1220s. I'd like to be a little bit closer to the money because it pulled up really strong on Monday. So by the time I came in on Tuesday, this was kind of far out of reach. Netflix also came in. I didn't buy the 465s. I bought the 475s on Tuesday for $3.09. On Friday, I sold them for $13.50. So I kind of like an old girlfriend that I used to have. Her personality and mood changed like the wind, and I had to be a willow tree in order to be able to keep up with her and just bend whichever the way the wind was going. I wouldn't break, but I would bend. And that's kind of the analogy I throw out as far as trading. I think that the market will dictate what you need to be it short or long. So keep that in mind. And the same thing that happened with the SPYs. One of our members made a comment and said they were short on Amazon, and it worked great. So my congratulations, because that's a first for you in the many years that I've known you in trading to short the market. So congratulations on that. All right. Not going to beat you guys up on that. But remember, you know, the market goes up and it goes down. You can make money both ways. All right, 1, 2, 3, 4, 5, and then 10 long. So I have 15 trades to talk about. It's 4:26. I'm sorry, I have to do this, folks. I've got to get my dog in because she is going nuts. It'll take me 2 seconds. I promise. I'll be right back. Thank you for your patience. Okay, let's get right into the trades. One of the ones I'm looking at for this week is coming out actually on the 11th. which is what day? The 11th is Wednesday, and this is coming out after market close. So there's a couple of days to look at this, see how it pans out, but it's Williams-Sonoma, WSM. It has a historical strong pull-up. Let me download this. Oh, this is Priceline. I'm sorry, I didn't get it. WSM. There we go. It's 100% or 10 out of 10 years, real strong point and consistency movement and percentage. It's sitting right at the bottom of the bands with a very strong bullish candle today. 90% probability on the hash marks of going up tomorrow. I'm sorry, I was looking at Apple on a tick basis today. Okay, real nice looking chart, folks. I love to see this kind of thing. Bottom of linear regression, bouncing off the 49 as support, strong upward strength. We've got a pulled up DPO. This is it's a real positive sign. Caution you though, this is sitting at the 93% of its last year implied volatility, which is super high, folks. And this is kind of a trade where if you don't want to take the earnings trade, which is coming up right there. Well, no, it's saying on the 18th. See, I believe that Thinkorswim has this wrong. I think I did this. See, they're saying, the NASDAQ is saying March 11th, which is this Wednesday. So it could just be, I think what happens sometimes is when these programmers put all this stuff in, you can see where this is sitting on the 18th here, and it should have been moved up to the 11th. Because according, and again, you guys can check it out and verify, but this is according to Zacks that it's coming out this Wednesday. And I'm assuming this, since it is after, it comes out after market, that that's when it's going to be coming out, according to Thinkorswim. It doesn't say here whether it's before or after market. So anyways, strong probable trade. And since we're looking for a pop on the earnings, and you can see this, folks, when you go to a 5-year, you know that we're looking for this earnings release here. So just simply put your mouse on the third quarter and drag it to the first quarter. It will give you this release, and you can see last year there was a real nice pop. And that's the kind of thing we're looking for. That was, of course, last year. So let's take a look at the year before. Year before, this is in 2013, real nice pop. So we got 2 years in a row. This wasn't really actually this wasn't. This was before market, and it tanked. So this year did not work. So 2 that worked, 1 that didn't. And the last one did work. So we've got a strong precedence of an 80% over the last 4 years of this really working well, all the way to 2011. So seasonally speaking and historically, which I've been doing this since 2008, when you have this kind of a strong historical track record with this kind of movement consistency and percentage consistency, pretty strong trade. So based on that, since we're looking at spot month to save money on premium, I was looking at the 8250s, and I'd written $1.65 for that. Not a lot of excitement here, folks, but if you go to April, well, April isn't a lot either. I thought there was another month that was. Now, there's more people interested in May, it looks like, so probably wouldn't throw too much at this. It's at 80.03. If you look at where the potential is, I mean, if you use just best choice, folks, one of these techniques really does work. You drag your mouse across the chart, make sure it includes today's bar. You do that by clicking the candlestick chart. As long as your program settings are set to show today's prices on short-term chart. As long as that is set, which I believe defaultly it is, it will update today's candle. You can then go to the linear regression, and the sweet spot, as Pete taught me, between the mid and the high. So that's about $4. So the mid, this is just a retracement to the mid based on what I'm looking at for the actual strike price is 82.50. And historically, we have a probability of this thing moving 13.3%, so that puts a BCS target of $90.57. If you look at the IV plus target, which is here, $5.68, that puts you as a target of $86. So the 82.50 is very conservative, is the point I'm making. You've actually got more volume today than you do open interest. Okay? It's one down. Next, Men's Warehouse. 90%er long. Sitting kind of at the top of linear regression on 6 months. 1 year, it's not a real nice looking chart there, but one of the things that I guess struck me was analysts are really excited about this company and stock, saying strong buy. 5 out of 5 that track this all say strong buy. Normally when I see something like that, they know something. Of course, they bought Men's Warehouse was acquired by Joseph A. Banks, if you guys recall that. And we've all bought, any of us men on here have bought suits from them at one time or another, or rented our wedding tuxedo from them. So 90% strong historical. You got a 72% up here. You got to be careful as well, though. So 100% retracement would be up to 54. 78 would be 51. You can see there's a little pattern. There's a little curl here on the DPO. Oh, thanks, Robert. It is aftermarket for what was it, Williams-Sonoma. Thank you. It is aftermarket on Wednesday. It's been confirmed. So with that, looking at pricing, and I looked at the March 50s for $1.75, so it's not too far away from almost being at the money. Actually, it's actually at the money. It's got a 48 delta, real strong, $1.75. Yeah, you're paying a little bit extra premium versus going out like you see some of these people did over here to the 52.5. You could stretch on that if you wanted. I have a BCS target of $55.21 and an IV plus target of $52.61. So based on the IV plus of $54.54, I'm sorry, $54.54 is this figure plus this figure. So does that justify stretching out to the 52 for only 85 cents? You could, but you got a dramatic difference in delta. I'd rather be a little bit more conservative and buy that. Okay. MW is coming out Wednesday also, aftermarket. Wednesday aftermarket. Did Big Lots, anybody trade Big Lots? Because they were one of those stores. Or what? No, Big, wasn't it? BIG. I think that was supposed to be a real strong trade. Did it? I don't know if it worked out or not. Oh, I guess it did. There it is. It was an earnings trade, I believe. Okay, so it did work out good. All right, so my thought train was, again, who was the recipients of the oil, and one of the sectors I thought would be the discount stores. And obviously Big did, and it worked out well, so that's good. So the next one in line this week is Dollar General. Less history. They missed last year, evidently. Every other year, though, was strong. The analysts are kind of 50-50. A lot of strong buy. They're not saying moderate. They're saying 9 strong buy. Target is 76. This person back on February 23rd, JP Morgan, said 85. If I look at the chart, strong pull up today. That is a bullish engulfing. By tomorrow, that's what it'll show. 90% probability of it going up tomorrow. Earnings are coming out on Thursday before market. I'm a little leery of this, though. All of this, if I was only trading technical, does not look good. But I got a little curve up on the DPO, only because it pulled up today. Now, I've seen where the PPS triggers, breaks the MOBO, goes down, and then it just goes up. I've seen that happen. And you can see where it's consolidating in here. It goes up. It's supposed to break down. It breaks. You've got kind of almost a hammer, and then it pulls up, and then it breaks down, it pulls up, then it has a strong pull up. But overall trend is definitely up. The 49 is above the 89. Very low IV. I did the calculations for BCS at $75.75 is the target. This is weekly. So what I was looking at was the 72.5 monthlies right here for $1.25. On a $71 stock, that's pretty inexpensive premium. And I've got a 43 delta. Can you guys see this right here? Okay, so that's Dollar General. Next, Ulta Salons is coming out this week. They're coming out Thursday after market on the 12th. And it's 6 out of 7 years. It was pretty strong. The 1 year it missed was 13. Analysts are pretty strong about it. You have 11 that say buy, only 3 that say hold. National Securities says 126 target. Nomura 126, RBC Capital 150. Boy, they're really froggy. It's way back in December, though. These are last year's projections. Definitely on an upward trend. You got the 50 in green above the 200 in purple. The blue is your 21 EMA. The red, very nice looking chart, folks. Very nice looking. Same thing that BCS looks. Little concern here, but it could be a hiccup. You see how it kind of trails away, the leashing effect pulls away from the 49, comes back down, pulls away, probably will pull back down. You got an absolute crazy Mobo DPO on the bottom. So just continuing to rise. Very strong company. High IV. I had a target of BCS of $157.63. The IV plus target is 154.15. So I was looking at the March 150s to be conservative. I had them down at $3. So it pulled back to $2.90 a little bit. Evidently, this pulled back. 30 delta, 290, 150s. Could you stretch a little bit? You probably could to the 155s. I didn't really see anything in April. Well, see, I saw the volume right here. Whenever you see over 1,000 contracts with a price of $3 and change, that's $300,000. It's a lot of money. So if you wanted to buy some time, it's more expensive, but not that much really if you think about it. If you take the ask price of $370 and divide it by the stock price of $140, it gives you a premium of only 2.6%, which is cheap. Really, it's under 3%. We love to have cheap premiums. Okay, this last one I'm not crazy about, but I guess it has some history behind it. And I guess I'm going to make a statement, only because I've just suddenly started to realize and notice it. Kind of like you buy a car and then all of a sudden you see how many of that car are on the road, and you're just all suddenly wowed when in reality there were always that many cars on the road. It's just you just suddenly became aware of it. Well, Ann is the next one. Ann Stores caters to portly people, and our society has accepted portly people. It is a 10 out of 10 with strong point and percentage movement historically. It's coming up with earnings on the 13th. Which is Friday in the morning. It's got a 14.57 potential return. Don't like the downward slope. Super high IV. So you guys know, for those people that don't want to trade through earnings or get that pop, when you see an IV rank like this, you can always sell the volatility. What it means is that all of these prices for Ann are exorbitantly high. They will all be absolutely sucked wind out of these things after the earnings. Now, you probably could tell which strike I probably chose. When I see an anomaly like this, there's over 1,000 volume, nearly what open interest is, tells me something's going on. Stock closed at $37. The BCS target puts us at 42. Actually, one of the things I've been doing is the 90-day 4-hour. It's kind of interesting. Maybe not on this one. It didn't work out. So let's just keep it to a 6-month daily. You can see what's happening right here. It's bumping up against the 50. But one thing I noticed, and this is just looking at charts for a long time, folks, you see how most of the time it broke the 89, since the 89 is above the 49, right? Every time it broke it, it was a red candle, meaning the bears had won on that particular day. But this time was different. And this was a strong Mobo breakthrough. Very, very strong. So in lieu of that, this thing could be taking the corner and changing its trend direction. Just an observation of looking at charts for a long time. So you see the 61.8 would be 38 and the 78.6 would be, so between these two, if you want to be conservative, instead of going the 40s, you could go maybe the 39s. You can even go the 38s, but that's a lot of premium. $2.20 for 37. I'd rather just stretch to the 40s, pay less, not buy as many, get a nice pop. Okay, that's enough with earnings. One thing I want to bring to your attention is following this options hacker that I am, something interesting came to light on Wednesday, March the 4th. And it's of a company that some of us here in the South are very familiar with. It's called CNX, a railroad company, very, very good company. Somebody came in, oops, not CNX. What's the railroad company? I must have wrote down the symbol wrong. It's not CNX. Anybody tell me real quick? Not Cox, no. CSX. Thank you, Tom. No, that's not it either. Well, I'll find it and then I'll email it. Somebody came in and I hope I didn't toss this. No, it's not there. I must have got rid of it. It was 28,000. It was 28,000 contracts in the April. Oh, that's why. I was looking at March. It is CNX. Right there. Somebody came in and bought 28,000 contracts for the April 30s puts, and they spent $1.50. Folks, that equates to $4.2 million of pure premium that somebody is banking that this energy company is going down. So I wanted to bring that to your attention. I didn't put it on the cheat sheet. If you want me to, I can, because this is, it's up to you guys. This is off the option hacker. Doesn't look like a very pretty chart, I will tell you that. This thing definitely looks like it's going south. I mean, you had the crossover right here, the 49.89, and it's just continued to go down. Yeah, if it breaks the DPO right here on a weekly 2-year, it's going to continue to go down. You just did a 5-year monthly. Next stop is 26, at least on a 5-year plan. Interesting though, right? 28,000. Okay, one that I do like that came through the option hacker is SanDisk. Somebody came in on Wednesday and bought 2,200 . of the April 92 calls, they paid 65 cents. So they're up already. About 5 cents. The reason I liked it, because you go, okay, well, there's a ton of open interest here, there's a ton of open interest here. How the heck do you figure out, are people paying strangles or straddles, or, what are they doing on this thing? Well, one of the tools that we have is, of course, best choice, and it's a 90% probability to go long. And you have this candle that appeared today with a 90% probability of popping up, a nice pulling up alligator mouth MACD. So again, I did not write that one down. I've got it written all down, but not on the spreadsheet. So you guys tell me if you want these. Another one that I had talked about last week, if you guys recall, was Nike and the run-up to earnings, right? And one of the trades, and it's not a real high probability here, but one of the trades that were executed last week, which kind of helped confirm my thinking of Nike running up, is somebody last Wednesday came in and bought this week's expiration of Nike, the 98s, right there, and they bought 4,436 contracts for 83 cents. So that's real nice confirmation of that. That's going to be kind of a bullish trade. Okay. Last one I want to talk about on this option hacker that came through is DRI, Darden Industries, Darden Restaurants. It's a 12 out of 12 year, 100% move up, which I like. I put this one on the spreadsheet. I looked at the options for April, and I like the 67.5s for 60 cents. Based on IV plus, seasonality, probability, all of those kind of things. I think that's a high probable trade. So I've got those. Courtesy of one of our members, and I'll mention your name. Thank you, Jerry. SNDK, do right in the sheet. Okay, we'll do, Sandy. Courtesy one of our members, he did some good homework, and I ran all these through to verify them, and they're all listed. There's 10 of them listed. These are all blue chip stocks, folks. They're all blue chips, MO. Not big movers, folks, but here's the thing about all of these, other than Apple, Priceline, and MA on the longs. When you look at the longs on the recap sheet, everything else is the blue chips. And I looked at strike prices, I looked at probability, I looked at target, I looked at IV, looked at a bunch of things. What's interesting about every single one of these, folks, you can get it, all of them, on the strike prices for under 60 cents. Some of them are 49, 66, 55, 25, 19, 25, 31, 54. These are the prices for all of these. I'm not going to go through them now, but they're all 100%ers. DRI is one of them. MO is another. AT&T is another. It was 100%. Oh, you know why? I probably did best profit. No, I guess I didn't. Thought I had 100% in here. No, it's 90%. So let me change that to a 90. CVS is another. It's a good one. There's the 100%. Merck, MRK. 90%. WMT. Wally World, 90%. I know you guys are looking at ratings and going, yeah, but folks, when you've got this kind of stuff, if you got these kind of setups, you need to take advantage of them. Now, you folks are going to have to time your entrances on all of these. I've done some of the heavy work courtesy of one of our members too, and my efforts to be able to show you these, but you need to be able to tweak your entrances because they're not all necessarily ready to pull the trigger, okay? But they're all got very high historical probabilities, and when you go and take a look at what the pricing is on this stuff, it's stupid cheap. April 85s. Look at that, 14,000. Somebody came in and bought 14,000 options today. That's a pretty strong find, isn't it? 63 cents. So it went down. I had 66. Okay, I wanted to leave some time. There's a couple of things I am going to do next time. One of our members called me and gave me a good suggestion. And that is that most of you guys are bullish and gals. As a matter of fact, I go out on a limb and say probably 95% of you don't short the market, which is fine. I understand that. However, we have an anniversary today. Do you know what the anniversary is today? Anybody tell me? Something to do with the stock market. Anybody guess what the anniversary is? It's the anniversary of the bull market. In all people's eyes, pretty much it started March 9th of 2009. So when the TARP money hit, so that's actually 6-year anniversary. So with that in mind, trees don't go to the sky, and this market will eventually correct. We don't know when, and I'm not being bearish at all, but you need to have an idea what to play. And one of the members had suggested inverse ETFs, which I think is a good idea, but not the triples because they move too fast, the doubles. What I'll do between now and next week is I'm going to come up with where you find them, and we'll put a list together of them. And this way you're buying calls. You're buying calls. You're not buying puts. It's an inverse. It makes money going up when the market goes down. That's all. So I'll do that for next week. Any stocks you guys want me to look at before we wrap up? Go ahead and put them out there. Yeah, okay, Tommy. I was thinking about it today, CMG. I am probably going to trade this thing. I love trading the weeklies. I like the cash flow. It's part of my personality, but CMG is definitely, as a matter of fact, thank you for bringing that one up. I am going to add that to the seasonal longs, Tom, right now. I don't know why I didn't, because I was looking at it all day to trade it. I just didn't. So I'll do the work on that. Very strong looking stock. I like it. It's a perfect setup right now. It's sitting at the bottom of the channel. You have historical precedence of an 11.117%. I'm surprised because I went through that math. I'm wondering why I didn't write it down. Oh, okay. I did write it down. I just didn't talk about it. So 11.117. $660.34 times 1.1117 puts me at a target of 734, which is a big move. But if you think about the types of move this stock does, it could move huge. It's like a Priceline or an Apple. But because we have a seasonal that kind of runs a little bit after, I don't know if I would buy the spot month. I would be trading the weeklies on this, of course, because they're cheap. You can make good money with Chipotle Mexican Grill. It's a great company. If you look at 734, I mean, it puts you way, way out here. If you look at the 730, I don't even know if the 730s. But if you're going to pay spot month, you have to go closer in. When I just look at premium versus stock, I like that one. For $3.80 on a 660 stock with a 26 delta. Got 2 weeks for it to move, basically $10, right? Well, 660, 675, $15. It says 18 right here for the IV plus. So 18 plus that puts me at 668. I'd wait for a trigger. Right now, I don't really see it. This is where your targets would be. And see 722, between 61.8 and 78.6. Okay, any other stocks would you like me to talk about? Oh, you have the March calls. Okay, there you go. That's a good pick, Tommy. It's a good pick. It's a good pick. What do they say? Good minds think the same. Any other stocks you guys want me to look at? Okay. Let's take a look at EXAS. I was looking at that earlier. Why was I looking at it? Did I have this on? Oh, well, there's WIN coming out too, folks. 8-0, WYN. I wrote that one down too. Only reason is it's still a little ways away, but be aware of it, folks. Write it down. WYN, because it's a 100%er. It's a little ways away, and right now it's in a downward mode, even though it says a 90% probability of popping up. I'm a little leery of playing it because it just came off a real high. It needs to kind of retrace a little bit. What was I looking at? I'm sorry. I was looking at two things. Oh, WIN. Yeah. Bouncing all over. Sorry about that. Exact Science, low IV, bounced off the bottom, got a hull pulling up, a mobile breakout. I like that from a technical perspective. EXAS, seasonal, well, not a big mover, S, meaning point-wise, dollar amount. So, and I tell you, I don't like playing under $20 stocks. It's my personal, it's just me. When I look at between 24 and 31, that is a huge spread. That's a $6 spread, which means it does have volatility. There's no doubt about it. I mean, $6 on a $27 stock is pretty huge. It's over 20% between the lower band and the upper band. I just don't like playing these kind of stocks. But as far as tactically speaking, it's a nice pull-up. You do have a pretty good historical. 71 point, well, let's not use that many years. Let's just do 10 years. 10 years, 80% probability. Between now and the 19th with a 13.98% move. However, that is skewed because of that year, and that year. You look at all these, I don't see enough consistency from 42% down to 4.9, down to 0.6. That's too big of a disparity. So I wouldn't necessarily use that as a definite target. I don't know what kind of volume there is on this. Oh, there's good volume. There's good volumes, and you could probably get it for pretty cheap. So not a bad find, but I just don't like playing under $30 stocks. But it looks like it's a pretty good setup. If I was to trade this, based on a 13% move, I'd probably be close to the money around the 24s, especially if I'm playing spot month. If I'm buying some time, I'd stretch to the 25s and try to pick it up for $1. I mean, it is about 4% premium, though. Okay, any other stocks you guys want me to look at? Going once. Okay, good old FB. Seasonally, we can't do anything with this because there's just not enough history. You know, if you just looked at this specific chart from the lowest it's ever been to the highest it's ever been, you click on 2015, boy, it's screaming up there, isn't it? But everything is right now because we've been in such a strong bull market. Everything looks like it's overbought and ready to pull back. I mean, if anything, there's a historical precedence for it to go down right now. From a technical perspective, it's just came off a peak and pulling down. We've got a breakdown. This thing is going to be going down the next couple of days. You can see it kind of rested here. I need to get rid of these because these were old. So if I was just to do a quick retracement to see where it would retrace to, probably around the 77, between $77.80, $78 around that area. I'd wait for the retracement on that. But I wouldn't necessarily want to play it long right now. I mean, this is a huge, huge volume stock. I would wait for this retracement to finish and wait for a positive. I just had a breakdown on the DPO, and it looks like it tried to break the MOBO on top, but pulled up and closed and didn't. But it looks like it's going to continue to go down. So I'd wait for it to finish its retracement and then wait for a positive candle around the lower of linear regression, because this thing you can see really has a nice roll. So it's kind of leashed away from the 49.89, wait for it to pull back. If it breaks the 49, see if the 89 acts as support. It may bust off of that. If it breaks through that, wait for it to regress all the way down until it touches the lower part of linear regression, and then play it long. Okay, any other stocks you guys want me to look at? TNX. Cannot find price data on TNX. That stinks. Oh, it's the Treasury. It has no options. You sure you got the right symbol? 10-year Treasury index has no options. So we can't look that one up. All right. I will list SanDisk because somebody asked, and if you guys want, I'll list that CNX where that person bought 28,000 contracts, dropped 4.2 million on the April 30 puts. So you guys can see what you want to do with that. TLT. Okay. Yeah, the Lehman Brothers. Nothing I can glean historically out of this right now, unless I really try to finagle to find some trying to trade in there. 310 to 318, 8-day trade, 0.8% move. It had more of a probability of a short. I don't see anything seasonally on this, so that cannot be of a help until you get into April. Then you got an 80%, but very, very small rating. Very small rating. But it's definitely oversold. I would wait until it busts the 200 because that is definitely going to act as resistance. I'd wait for this to bust the 200 and then look at perhaps buying calls on it. All right, any other stocks you guys want me to look at? Don't be shy. Go ahead and speak up. Oh, one that you should probably also look at is Green Mountain Coffee Roasters too. It's a 90% probability starting right about now. Plan down to what? I don't understand, Jerry. So GMCR, basically that's Keurig, right? One of the reasons I didn't talk about it is it's in a downward trend right now. And it looks like the HMA is about ready to turn. Looks like the DPO wants to come down above the zero line. I do have a PPS, Person's Pivot study, and I have a 49 under an 89. So I'd probably wait for this thing to pull back a little bit in lieu of the fact that even but seasonally you have a strong probability. And 11.79% is a nice percentage move. So I was looking at the 130s, but that was stretching it a little bit. You could go out to April on this. There's a lot at the money right now at the 125s. That's way too expensive to pay for $126. I will not pay that kind of premium. These are probably people that are selling calls, collecting premium. It's definitely not going to 140. There's very little short interest compared to the long interest. And if you look at these that have over 1,000, they're at $5 increments, which means people are doing spread trading on that at $5. Price line is on my sheet. Absolutely, Jerry. It's one that I am definitely looking at to play. PCLN. It's a very strong upward trend of 90%, even though the rating isn't, supposedly that great, but that's no biggie. It's sitting way at the top here, pulling back a little bit. Definitely price line, Netflix. These people both got destroyed this week. They did their pull-up. Let's see if they start rebounding. If they start rebounding, unless you're going to buy some time and go out to April, if you're looking for shorter term, only because I'm just a little leery of this market right now, and I want to see a little bit more confirmation that this DPO pulls up, because as the NASDAQ goes, so does all the favorite ones we like to trade, Chipotle and Netflix and Priceline and Apple. Apple has a lot of tug to still controlling the direction of the comp, the NASDAQ. So only because of this is a little concern to me of going long yet. I do know that Priceline, though, did hit its bottom, what I feel is its bottom. But I just don't have enough confirmation. I mean, it just broke. If it pulls it out, think about Priceline as it closed at 217 tomorrow. It's real easy to see what this thing does because they have the MMM on this all the time. It could be up $10. So, a lot of people loading up here at the 1250s. Really difficult for me to project where this thing is going because it's just such a strong stock for me to figure out a target other than what I did from a seasonal, just using very basic stuff. Okay, the seasonally moves 7.22%. Okay, makes sense. 7.22%. Stock closed at 1217 times 1.0722 gives me a target of ding, 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 $1,304. So that's what I actually put down on the cheat sheet here, is I put 1,300, but I put April's. Right there. 1,284 contracts for $9.10. Buying enough time, and even if you took the $73 that the IV plus and you add it to 217, or 1217, excuse me, puts me at 1290. So if you want to be a little bit more conservative, you could go a little bit closer. I mean, let's face it, folks, even if you went right here at the 1285s for $12.10, that's 1% premium. And you could probably end up selling that by the end of this month when this thing is skyrocketed to probably $48, $50 plus dollars. Double, triple your money. So I like it. Apple moving to the Dow, correct. Thank you for reminding me. We all know that. Apple is taking over AT&T's spot in the Dow Jones, and they're releasing their Apple Watch. I like Apple. I was going to trade it today for the weeklies. I missed it because of my dog, and I'm very angry at my dog for that. But it really doesn't matter. I was going to buy the 127s. Which I probably still will, even though I see a lot of people loading up right here at the 128s. From a short-term perspective, this is on a 6-month. This is from here to here to here as an extension. 131 to 136 in this area is a very strong potential. Probably not by the end of this week. Could be. So if I went to a shorter term time frame, for example, like a 10-day or a 10-day 30-minute, and I said, well, where would this thing retrace to based on its last 10 days? There you go, 130, 61.8. That will act as a resistance level. So if you were to want to trade this, you could either do spot. If you're going to do spot week, you need to be closer to the money, 127, 128. If you're going to go a little bit further out, go, let's say, the monthly, right? You could stretch probably to the 130s, and as you see, folks, that's where you got all the open interest and all the volume versus any other strike price. And that's only $1.11. Okay? So I'm going to put Wynn down because you guys, and Chipotle Mexican Grill. All right, any other stocks you guys want me to look at? Nope. Okay. Well, listen, thank you for attending and good trading. And next week we'll talk about how to position yourself and be able to prepare for when a meltdown does come and be able to take advantage of it and make money by buying inverse ETFs. Until then, I wish everybody great trading, and we'll talk to you guys next week.